Okay, hello everyone. This is Red with Red Dragon Leo. It is September the 7th, 2011, and this video update is for tomorrow, Thursday and Friday, and next week probably. Okay, as you can see today, we are rallying just like I thought we would on the weekend video that I did on the blog. So, if you did not see the weekend video, I posted it here that I suspected that we would rally. And so, let's see here. Just so you know where it's at, you can see here I posted some stuff about Benjamin Fulford called Benjamin Fulford, I'm sorry, tongue-tied there today, and the secret meeting of 57 finance members or ministers and what it means for the stock market. They are running out of money, no question about it, and they're giving some ultimatums. So in my opinion, he's not calling the stock market based upon any particular day-to-day moves. So we got to kind of look at this at the longer term picture, meaning the next couple of months or so. And to me, it means that they will not have the money to stop the stock market crash. So that is obviously very important. Well, if I can get to it here. Clicking on everything here. Got all these windows down here at the bottom. Sorry, there it is. Okay. That tells me that we are more likely to continue down. Some people had emailed me. The reason I'm covering this, some people emailed me and thought that possibly that this might be a bear trap and it might turn and rally to new highs. I don't think that that's the case. And here's why. The monthly chart is the most important chart of all. This pattern, this is a huge MA pattern that dates back 10 or 15 years, 15 years or something like this. MA patterns are notoriously bearish. And you can see the big M right here. You can see the left side of the A. We are starting to make the right side of the A. This is the monthly chart. I do not believe for any moment that they have the ability to turn this back up and continue rallying higher. I just don't think that they can do it. There's nothing in here that indicates that they can do it. They do not have their money supply. The ability to print, massive money, I guess, is according to Ben Fulford, because a lot of those codes to be able to just print money, and I don't mean physical money, I mean just to make numbers up in a digital format, not physical money. As a matter of fact, I think less than 5% of the money that is actually out there is debt. Less than 5% of it is actual real cash you can put in your hand. The other 9% of it, 95% of it is digital money. Just zeros and stuff, just wipe it out. And that's what they have to do. The gangsters want this lower. They want to crash this market so they can buy it up at a much, much lower price. And this MA pattern easily projects down here to 3,000 or so on the Dow. And it might take all of 2012 and into 2013 to happen. I don't know. But that's what they want. Now, the good guys that Ben Fulford talks about all the time, the White Dragon Society, they want the market to be clean and free of debt. So they have to let it crash too. And, so either way you go, it's going to crash. It's already in the cards. There's no way around it. So they're going to let it crash before they come in with their money and help the economy out and free the world. So that answers my question, or the question to the person who sent me an email thinking that maybe this was just a big fake out bear market and we would continue higher to make new highs. I don't see it possible. And I don't think that they can even create the inflation that they want to create because once they get 25% unemployment or more, people will stop buying. It will not matter. Inflation will still be there in food costs, but as far as the stock market, companies won't be making profits. They just won't, because nobody be buying nothing. So you're not going to see a huge rally in the market, an inflation-driven rally, because there's not going to be any consumption except for food and basic necessities. That's it. So, okay. So I covered that. Now, here's what I'm looking at here. As I said in the video that I did here, in this video right here, I did say that we would go higher, and I was off on the target low. I thought we would only go down to about 1160 or so, hold that support, and then rally up. I was wrong on that. We actually went down to 1140 area and then bounced and went up. But, you know, it did turn up as I expected. You can't get all these right. You get them wrong from time to time. So hopefully everybody, you know, was able to see that and get their spot in long if they chose to go long in this, or if they chose to set it out to just exit their short. So hopefully everybody was okay there. Now, I rarely, looking back at all these patterns here in the past, I have rarely seen any incident that the market gapped down and continued down and did not rally back up to at least equal the high right here. That was the reason that I exited all my longs, because I do not know what tomorrow's going to bring. It could be like this candle. If it opens flat, you should expect it to sell down, and that is a possibility. Okay, so very much like that. That's not the scenario I'm looking at. I'm thinking that they will gap it up, because they do this so many times in the past. They gap it up with the to trap the bears. I'm sorry, to get the bears out, to exit them out, and then they reverse it and they go back down. Now, they don't usually sell off. Most of the time they turn it in late in the day, they turn it back up, and they end up with a doji type candle, spinning type candle. I keep thinking of martial arts and a dojo. I don't know why I do that, but it's doji. Sorry. So, which is a spinning top type candle, much like this one right here. Here's your perfect example. They went up hard, and then they put in a doji. It's not a perfect doji because you see a little bit of white, but that's where you basically go a little bit higher, a little bit lower, but you don't really gain any ground or really sell off. Same thing with this one. This was a very, very narrow range candle there. You could call that a doji. And so anyway, so what I'm expecting then tomorrow is again a move up in the morning and then down throughout the day. How far it goes down, I do not know, but it very well could go down into Bernanke's speech, into the 2 p.m. time slot, and then maybe he says something positive or gives the market some hope, and then they rally it right back up, and then that would mean they'd close about break even there, which would be kind of a doji. And you can clearly see, as I said, I thought we would continue higher up to about 0 before we go down. Now, we have already put in a higher bar right here, so technically we could draw a line right there and say that we have put in a negative divergence already. So we could pop up and then turn and go back down at any point now. There's nothing to say that we have to go up to 0. It's just my gut feeling that we will go up to 0, because they like to go to extremes. If that's the case, then we put in a doji tomorrow, and then Friday might be up a little, and then Monday through Friday of next week we will try to make another hard rally, and this time we would break the resistance levels that are that are currently overhead, and rally up to 1240 to 1260 area. That is a possibility. So let's look at the shorter term charts. But again, that would indicate we turn back up and then go back up here to maybe 80 and then roll back over next week. The reason I say that, well, here's also, as you can clearly see on the slow stochastics, it can also go up. But draw your line right here. Draw a line right there. You can see we're also hitting resistance. That's why we backed off in the first place. Now, but the other reason I said that is that the market here needs to put in a positive divergence here on the weekly as well, meaning that we possibly go up this week and maybe even next week, and then you tank after that. And so it would come down here and put in, let me use my little pen thing. I'm getting a little better with it here. So let's see, where is it at here? Tablet, pen. Okay, so boom, 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 boom. Okay, now where am I at here? All right, so maybe next week we do a bar like this. Okay, that's a scenario, and then that takes us into OPEX. You know, they usually like to run OPEX up. Options expiration, that's OPEX. They like to close it positive and eliminate any of the puts, the people that are holding puts, any of the bears. They like to kill them. And so after that week, which is next Friday, and tomorrow being the 8th and the Friday is the 9th, next week is that would be the 16th. That could be our turn date. We could actually turn down that week, or we could start to turn down that week, or right after it. And the 12th is a full moon. Okay, and that means that within 2 to 3 days after that time period, the market usually bottoms. So we've got several scenarios here, and I want to cover here. We could go up into the 12th and make a high in the 12th. It's just a turn date, and the full moon is the 12th. But if you add 2 to 3 days, that would put you at the 15th or something like that. Okay, so you could top into that day. It's possible that we could top into that day instead of bottoming. There's nothing that say it just usually bottoms, but it's a turn period after that, and it has been very accurate. So I want to just show you that the guy's stuff right here, and you can see right here, this has been very, very accurate. Here's the 12th, and it usually happens shortly after that, 2 to 3 days after it. Notice here on the full moon, it actually topped a few days after it. Here, notice that it actually bottomed, I guess, shortly before it. In this case, rallied up, then bottomed again. So you would have seen the bottom here as it kind of churned around and probably exited because it was getting close to the 15. This one was early. This one here was early as a top. So when he says 2 to 3 days, it's sometimes after 2 to 3 days or sometimes before. So we have to go with the chart as well. And here is a bottom for the full moon. And this was a couple days after, at least one day after. This one here was a couple of days before on the new moon. And this one here was dead on, it seems. This one here was 1 day before. This one here was a little off. It did have a bottom, then a rally, then it had another bottom. So this one was a little off. This one was very accurate. So as you can see, these full moons are important. So we're either going to run down and bottom into the 12th through just based on the charts, the 12th through the 16th or 12th through the 15th, and then rally up. Or it's possible we could rally up and then turn down right after this. I don't know which. So going on to here, what I'm seeing here for tomorrow is, this is my most likely scenario here. What I'm seeing is I think they will gap it up on some fake jobs, numbers, data, whatever, and then they will put in a nice topping tail and come right back down and start to come down. Now, the question is, how far will they take this down? As this, gaps up, it should roll over here. Now, I don't know how hard it's going to roll over. I don't know if it's going to roll down here and put in a move like this, which would indicate that tomorrow very well could go down here into the 2 o'clock time frame with Bernanke. Now, obviously, this is not scaled right, with this being the 7th. Today was September 7th, 8/12. Okay, so you can see it's not really scaled right, because that kind of takes it into Monday, but you get the idea. So if it turns back up, you could expect it to run back up a little bit like this, and maybe actually close, with that spinning, with that topping counter panel, maybe a little bit on the downside, a little bit in the red. Still kind of a dojo kind of pattern. This is still a possibility before it breaks out next week. So that would give you the likely scenario right here. Now, this is just one scenario. So if it gaps up and hits somewhere close to about 12.10, that would be my ideal spot to short it. Now, if this is the case, then this would be a B wave down, with this being A wave up, and this starting your C wave. And then maybe it chops around here a little bit and it goes in 5-wave pattern, and finally gets up to somewhere in this area right here into next week. Okay, into that 12th to the 16th time frame, again with OPEX being there. But literally it could crash into OPEX, but it's generally bullish into it, so that's just something to keep in mind. But it could crash into it, so that is a possibility. And this whole move up, again, this whole move right here would complete the 4th wave. And if that's the case, then after this you expect your wave 5 down to complete this larger pattern of this whole move being a wave 1. So that is one scenario. Now, the other scenario is that we didn't mean to do that. I don't know what that was. The other scenario is that we go down in the morning, okay, and it kind of rolls over here in the morning, and then they don't let it go down very much, and they turn it back up into the afternoon. So that kind of goes down and comes up like this, and kind of runs it over into Friday to put in, as you can see, a lower histogram tower. And so this would continue up a little bit, dip a little bit, and continue up before it runs over. If this is the case, I would just set it out and just wait and see what happens. Now, here's the scenario that what you're looking for here to know this, to whether or not this happens correctly or not. And that would be if it gaps down and kind of does down on low volume, and then comes back up and makes no attempt to come back up here and fill this gap. If it doesn't make any attempt to fill this gap, I would think that it's going to reverse and run back up later in the day. That's just my thought. That's just what I'm thinking that they're going to do if they make no attempt to fill that gap. If, on the other hand, they immediately gap down and then come back up here to try to fill it, then you'd be looking to short it for a nice move down that would probably last most of the day. That would be my scenario there. So if they try to get up there and fill it, they might not get it filled. They might only go up, 2/3 of it or something like that. Then it would be a nice short. But the ideal scenario here that I'm looking for literally is a gap up to short it. And you'd see the same thing right here. And you would gap it up on the 30. You see here how we are here. So if they gap it up on the 30, you'd expect it to kind of go like this, and then to go down to put in that lower trough low as it heads down, and for this to run over on the 30. So you would expect, boom, gap up to hit close to this area, then fall back down as it rolls over. It's a common pattern that they've done previously in the past. This is your ideal shorting spot should you decide to short. And again, the same thing on this chart. If it decides to gap down first to wherever and continues down, I just stay out of it. It's probably a light volume. They're probably going to just reset this, go down here, and then turn it right back up, and then they're going to make that into the next day or something, your negative divergence. As this makes a lower tower right here, you expect this to be a higher high. That's the way negative and positive divergence work. So, you know, it goes down here, then it turns and goes right back up. And this, you know, you'd call this the positive divergence. And so that would be how they reset the charts. And then now you've got your whole A move down, and then you get your B wave here. I don't know how low it would go. And then you'd start your C wave into next week. That would again possibly go up to that, I don't know, I'm guessing here, 1240 to 1260 range. I really don't know. You have to look at the time and everything. But you could also draw a line out continuing it here, and it just depends on where it hits it at that point on that day, somewhere between the 12th and the 16th. We don't know if this was going to roll down here and start a wave 3 down or do an ABC up. So if it does an ABC up, then this is what our likely scenario is. If it doesn't do this and starts a C wave down, then obviously this move down, this would have completed the fourth wave right here, and this would be in your first leg down, your first wave down of wave 5 of your fifth wave. And this whole move here would have been a wave 2 up after a gap, I would assume, again. And then you would start wave 3 down, which would be a nasty wave, and then wave 4 up, and then wave 5 down. All this inside, this whole big move is a larger wave 5, the fifth wave, and was what I would expect of this to happen. So that's a possibility. I don't know. Either way, you see your ideal, either way you short it right there is basically what you do. If it gaps up, you short it. If it gaps down, let's look at this again. If it gaps down, you're looking for it to come back up and try to fill the gap and get close to it. I'd say maybe 60-70% close to it. If it does, then you short it and let it run down and see how far it goes. Does it make a B leg down or with the C to follow, or does it again, or does it make the or does it start wave 3? But whenever it tries to fill that gap, it's likely that it's probably going to come back down, because what that's going to do is kind of try to make it run up here and put in a negative divergence on it. It tries to feel it, but it can't. And so to get close to it, so don't wait for a gap fill. I mean, if it comes up there and tries to fill it, I expect it to run right back down. Now, again, I don't know how far. You have to play it. But if it comes down hard, I mean, and breaks that, then shoot, you're in on a wave 3 down or a B. You just don't know at this point. You have to wait and see. But again, if it gaps down and makes no attempt really to fill it and just kind of starts to float down, I would expect it to find a bottom at some point and curl back up, and because it's not likely to gap down. Again, I have gapped down without trying to fill this. I have rarely seen it. You look again here on the daily chart, and you just don't see any instances. Even here, if that was a gap down, I don't remember, you see it ran back up, got right to the top, and then continued down. I don't remember if that was or not. That might have been just open flat and went down. Now, if it opens flat tomorrow, then yeah, you expect it to go down. Don't expect it to rally if it opens flat. So, that's your ideal shorting spot if it opens flat. So any way you look at it, you can see that is the scenario. Now, here, as you can see, you can basically look at this, and you can kind of see what could happen here on the 15-minute chart. As you can see, the 15 is curling back up, and very well on a gap up, what are you going to see? Boom, like this. So boom, you get your gap up. It's going to fail quickly as it runs out of steam. Your ideal shorting spot, again, you can draw your line right here, and there you go. It's roughly there around 12, roughly around 12:10. Boom, it hits it, falls right back down, and then continues down again, and I don't know how far, but that would be if this curls up like this. If it does not, then if you gap down again, then you would expect this to continue down and then to curl back up later in the day. So, and that would be like on, well, it wouldn't go that high, obviously. It might just go to, I can't erase that, sorry, but so you would see it come down a little, and then like that, and then maybe back up. So it would chop down here a little and then curl back up after maybe at 2 p.m. or something when Bernanke speaks or something like that. So so if it gapped down and didn't really make much of an attempt, then I would just look to set it out. I wouldn't touch it unless it makes a rally back up, then wants to fall. So if it makes a rally back up very quickly, that tells me they're trying to fill the gap before they sell it off. If they don't do that, then they're not making any attempts to fill the gap because they know they're going to fill it later in the day. And same thing here on the 5-minute chart. You can just as easily gap up and then fall right back down. Same thing there. So all this tells me, again, these are your scenarios and what I expect for tomorrow. So I hope this makes sense to you. So again, my main focus here is if it gaps up, boom, there's your short around 12.10. Don't know how far. Again, could only go down to here or less. And we just don't know. We just do not know. If it retraces most or all of this, it's a very bearish day. And then it very well could gap down on Friday and keep on going. That could be your wave 3. So again, with that being wave 2 and that being wave 1, if it goes all the way down here to here. So that's a possibility. But if not, then then if it gaps up and just starts to come back down, there's a possibility it could find some support in here and maybe try to curl back up and run right back up again into later in the afternoon and maybe close right around flat. If that's the case, then again you would see this being basically a day like this, a doji. And if that's the case, that tells me it's bullish and that they will probably continue up into Friday and into next week. And so if that's the case, and you'd see it finally work its way up here to around this area. Obviously the time is off on this, but before it would I'll kill that and try to get this. So if that was the case for that day, then maybe up a little on Friday, just guessing, maybe up a little on Monday, maybe down on Tuesday a little, back up on Wednesday, Thursday. You see what I'm saying? Into next week. But again, the full moon is on the 12th, so we don't know when that's going to happen. Somewhere between the 12th and the 15th, we're either going to find a bottom or a top. And so that really means that next week, if we close out with a little bit of a rally here, next Monday to Tuesday could be the top, and we could actually turn and sell right back off into OPEX, which is rare, but it happens. We do sometimes crash into OPEX. It happens. Most of the time, it is a rally into OPEX. Which, if that was the case, then you'd expect this to be maybe a doji tomorrow, and then maybe selling down Friday or something, and then maybe bottoming out on Monday, but still remaining in this bearish rising wedge. And then you could rally up into boom, 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 rally up. I don't know how high it would go. Maybe it goes all the way up into Friday of next week. It's a possibility. It's hard to say on that one. But certainly by then, this would obviously be getting up here to zero before it rolls down. And that's just my speculation on what I'm seeing. So hopefully this makes sense. Again, one last time, I am only looking to get short if we have a gap up to somewhere close to 12.10, or if we have a gap down. It starts off there and immediately tries to fill and comes close but doesn't. That to me is a short. Okay, and if it does not if it gaps down and kind of continues, I'd stay away from it and just let it recycle, because it's just basically, if it gaps down, it's probably going to come down here and come back up later on. They're just going to run it down on the 15, let the 30 get over sold a little, and then they're going to come right back up after Knucklehead speaks. So That's your scenarios for tomorrow. Of course, I'll be on the blog and in the chat room to tell you what, how, if anything changes. But okay, guys, I think that's it. I went way too much detail. Probably. I'm sorry these videos are long, but I try to give you all the possible scenarios the best I can. So, good luck, everyone, and I'll see you tomorrow.